it's Kevin here, and today I'm going to be talking about how to invest as someone that has no experience with the stock market. I'm going to be talking about three different subjects: how to invest, the three different types of investors and investment strategies, as well as how much to invest and how frequent you should be investing. Now, I got first interested in the whole concept of investing when I stumbled upon the concept of compound interest. I was playing around with the compound interest calculator, and I see that over a very long period of time, how a very small amount of money can actually grow really, really quickly. Then I started reading a couple investment books. And then after reading for a while, I got started and I opened an account with Robinhood and put a couple $100 in there. At the time, I think that was worth probably around 3% of what I had overall. Started small, then I put a little bit more money in it. After a couple months, I put a couple $1,000 and I got started from there. And as of now, I've been investing for about 3 years on Robinhood. I think the problem with most millennials is we don't like to save, let alone invest any money at all. And even for the people that do invest, they end up investing the very bare minimum in their 401k or IRA accounts with the companies that they work with. And I think it's a really big problem. Most of the people that I know with significant income in their portfolios are age 40 up to retirement age. And at that point, it's a little bit late to start investing, but of course, it's better late than to never having invested at all. So let's talk about how to start investing. Well, I think for the majority of most people, hiring a financial advisor is probably the best route because if you're not comfortable doing it yourself or you have no interest to investigate the stock market or keep up with financial news, that's probably going to be the best route. Financial advisors do take a percentage commission of the amount of money that's in your portfolio that they do trade. And of course, they all say we don't really make any commission on the stocks that we recommend, but that's really part of their script. And I would know because I worked in Morgan Stanley for about a year. But it's still better than not investing at all. So that's going to be the route that most people should take. Now, I read a book called Unshakable by Tony Robbins, and in that book, he mentions a new concept that I've never heard about, but it's called a fiduciary, who is also a type of financial advisor, but the difference is that they have their clients' interests in the front of their mind because they don't make any money off the stocks they recommend. Now, fiduciaries do operate on either a flat rate or a smaller percentage of the portfolio that they manage. From my research, it was not exactly very easy to find a fiduciary, but if you do find one, that is actually a better path than to work with a registered financial advisor of a big firm, because those guys are out to take your money, but also help you earn money overall. So that actually is going to be the best pathway if you don't want to do everything yourself. Now, the last way to invest is what we're here for today, is to invest yourself. So there are three different types of investors or investment strategies. The first type is called day trading. And what day trading is you would buy a stock and you would sell it within the same day. This is also the riskiest option of the three. Usually day traders trade really frequently, and they do it kind of as a full-time job. But it's really not recommended for most people because 90% of day traders, they either end up earning very little income or they end up losing money. And the most successful day traders end up losing money for the first 6 months to 1 year before they really start getting it and start scaling up the money that they earn. So for 99% of people, day trading is really a bad idea. And most likely you're going to lose money doing day trade. The second type of investing style is called stream trading. It is when you buy a stock and then you sell it on a different day, whether that's the very next day or 3 or 4 days after. Now, I did swing trade on a very small scale with the Tesla stock, and I did end up making some money on there. But it's not the strategy that I prefer, so I won't be covering it in detail on this channel. Now, the last type of investor slash investment strategy is called long-term investment. And this is what most people should do, and this is what most people actually do, so that's a good thing. Basically this is where you buy the stock and you hold it for a very long time, whether that's 1 month, couple months, or even a year or longer. And I think this is a really good way to invest for most people. If you don't really want to do the work of doing this extensive research on a company, you can also invest in what's called an index fund, which tracks multiple companies, up to 500 to 1,000 different companies in the index fund. And this way you can get a huge diversification in all these different companies without having to do the research. And it is also a very low cost and very safe way for you to start investing. This type of approach is very hands-off, so all you have to do is buy the index funds and just let it sit there and sell it a couple years after. To answer the question of how much to invest, you'll have to think about when you need to use your money. For example, if you anticipate buying a house in the next 2 years, obviously I wouldn't invest your down payment money. That would be a very bad decision. For me, I'm not really planning to buy a house until 2024, so I'm comfortable investing all of the money that I have right now, or the majority of it. How often you invest doesn't really matter too much, just as long as you keep your investing frequency very consistent. So you can invest every 2 weeks. I like to invest every month. You can also invest every 4 months or every quarter, which is the way that most financial advisors recommend, but that also takes a lot of patience. But if you work with an advisor, that is what most likely they'll help you do. They'll help you invest every 4 months to rebalance your portfolio. So that brings us to the conclusion of this video about how to invest as an investor with no experience. I will be making a video about my specific experiences in the stock market, the mistakes that I've made, how much I lost, how much I earned, and my overall experience over the course of 3 years. So if you're interested in that, be sure to like and subscribe to my YouTube channel to see that upcoming video. It's Kevin here, and thank you for watching this video. I will see you in the next one.